Welcome to SimplerOptions.com. Here we are on the weekend of October 18th, 2015, looking ahead to what can only be described as this is it. This is the week of the big boy earnings announcements. So if you are into trading earnings over here, this is going to be your week. My name is Don Kaufman. Again, we're going to look at just a few major earnings trades, and we're going to be detailing these throughout the course of the week. But let's kick it off here, just talking about a few of the major earnings announcements. One, of course, is going to be Google. Google is going to be Thursday after the close, and again, Thursday, that's where it all comes to a head in terms of this earnings season. Again, Google. Right now, in terms of Google, you can look at Google, you can look at Google L, you can call it whatever you want to call it. The 5-day options inside of Google are looking for a $41 expected move. Now, $40 move inside of a $662 stock. Is it a little convenient that that's going to take it right to $700 over there? Don't do it to me. Okay, please. But the one thing I've actually been looking at isn't just the fact that, all right, it's going to take it to a nice 700 point. Google is poised for all-time highs over here. All-time highs in a marketplace that has been relatively volatile. Okay, so you look for Google's, earnings, again, a $40 expected move or almost $42 expected move right now. The reason I mention that here on a Sunday afternoon is look for the expected move and look for variance in it throughout the week. It could be meaning like when I say variance, the expected move starts to really go up. Does somebody know something? Does that mean risk is imminent on that particular product? So I think Google is one of the more exciting ones to be able to look at. And then I'm going to flip it around and we're going to take a look at none other than Amazon. And the reason I'm bringing up Amazon next is Amazon as exciting as Google? Well, you be the judge of that. And once again, when is the earnings? It's the same day as Google, which makes it that much more exciting. One of the reasons I wanted to bring up Amazon, though, it pretty much is just off the all-time high. Now, what I think makes Amazon just a bit more exciting is it is a $570 behemoth over here with almost a $50 expected move. So you're getting a lot more bang for your volatility buck in looking inside of Amazon over here, which is pricing in between like an 8 and 9% expected move. Now, I don't know about you, but I kind of think that that's quite exciting, at least in my book over here. It's, again, probably around the earnings announcement, you're going to be looking at about an 8% expected move, 8% of a $570 behemoth over there. Now, before I just point out like, oh, this has earnings, you got to trade them. So how can you trade them? Okay. One of the things that I'll tell you about earnings announcements, especially in $570 stocks, I'm not the guy that's comfortable in selling premium naked. Now, I've got the account to do it, and I still don't. It doesn't matter how much premium is out there. When there's almost a $50 expected move, that's what they're expecting it to move is $50. What could happen in the unexpected? Well, you can go two times the expected move. So, roughly speaking, when you're looking at these expected moves and you're like, okay, let's call it $50, well, something unexpected, good. You can have a $100 move. Okay, then you can go 3 deviations. What's 3 deviations? Let's just roughly call it about $150. And if you don't like the idea of a $150 move, don't sell stuff naked. I don't care whether you're bullish, whether you're bearish, whether you're neutral. Don't sell stuff naked if you can't take the heat of a $150 move. Now again, it doesn't mean don't ever sell naked. No, I sell plenty of stuff naked. But a $150 move, okay, how are you going to feel after that? I mean, realistically, like you go out there and you sold these 500s, and believe me, lots of people are going to go, oh, there's a big round number. I'm going to sell me some 500 puts, and I'm going to collect $3, $3. And all of a sudden, the next day, the stock is sitting at where? 450. You're like, wow. It's not going to be too exciting, is it? All right. Who's the big winner then? Whoever bought those 500s from you. But, okay. In any case, I'm not comfortable selling stuff naked around the earnings announcements. Me? I like to be defined risk, all right? Because I don't ever let one major event cost me a portion of my account large enough for me to even discuss. Meaning like one event isn't going to take me out. So if I'm going to do an earnings trade, now there's Amazon coming this week, there's Google coming this week, there's Caterpillar coming this week, and Caterpillar has just had, just beaten and beaten again, lately. And then Microsoft is coming on Thursday, and there's IBM this week, and oh my, there's a lot. Again, if you're into earnings, this is your week. But allow me to say, define your risk. If you want to get bullish, don't get cute. Just put the trade on. When I say you want to get bullish, don't go out there and just buy a call. You're going to get volatility crushed. You ever been volatility crushed? It's a lot of weight. Here is a $5 wide spread, okay, for $2.50. I know it says $2.48. Just call it $2.50. $2.50. So you risk $2.50 to be able to make $2.50. So that is like your bullish trade. If you wanted to be bearish, how could you build a bearish trade? I don't know. Do the opposite. Just take the other side of the trade over here. When I say take the other side of the trade, build some kind of a bearish spread. Buy a vertical. Here's like a 72.5, down to 67.5. This is the exact opposite of that trade. Now you do one or the other. If you're bullish, this is your bullish trade with calls. This is buying your put spread with puts, right? Buying a put spread over here. And if you wanted to be net neutral, what's net neutral mean? It means going out there and selling premium. You go just over $50 out of the money. Just over $50 or $60 out of the money, whatever you want. You go out there, you build yourself a neutral trade, right? And how do you build a neutral trade? Well, let's delete these trades over here. Delete them, delete them, delete them, delete them, okay? And you go out and you actually correct, and construct a effective trade. And that means you can go maybe sell the 630s. I don't know. Let's buy the 635. This is $5 wide call spread that I sold. Then go about $60 out of the money on the put side over here. It takes me all the way down to the 510s. Sell the 510s. Buy the 505s. What do you got? You got yourself an iron condor for around $1.45. What's your risk? $3.55. That's it. That's your neutral play. At least it's defined risk. If the world blows up in Amazon, which it could. Why do I say that? Right? I mean, look at this thing. I'd say it's a buy the rumor, sell the news, but apparently all the news has been nothing but good because the stock is from the 500 level to 570. That's a big move. But if you want to be neutral, do it the effective way. Sell the iron condor over here and just say, hey, I think it's going to be inside of the expected move. Or you could be bullish like I showed, or you could be bearish like I showed. Think about it. A multitude of strategies is effective over here. Speaking of multitude of strategies, Mr. John Carter himself is actually going to be doing a session when? This Tuesday, October 20th, 8 p.m. Eastern Time. What is that particular session on? It's just about the best strategy. We've been through a lot of volatility. Volatility is now contracted. Okay? And during this session, he's going to be talking about exactly what I was looking at. When to trade the expected move and when to bet against it. Okay? That ultimately means, do I sell the expected move in Amazon or do I buy it? Do I think Amazon's going to move less than $50 or do I think it's going to move more than $50? And John's actually going to get into detail, but he's going to talk about really a couple of different strategies for a few different market conditions. And we've experienced every one of those market conditions in the here and now. Check it out. It's simpleroptions.com/best. This is a completely free session here. It's a free session here. It's the best trading strategy. And again, simpleroptions.com/best. And we're going to go through a couple of different strategies for a few different market conditions, when to bet with expected move and when to bet against it. Thanks a lot, everybody. This is Don Kaufman here for simpleroptions.com. Bye-bye.